Happy Friday, Eric Bible with the Bible team at Neo Home Loans. And yes, it's all about the jobs. The highly anticipated Bureau of Labor and Statistics jobs report dropped this morning. And again, hotter than expected. We'll get into that in a second. But first and foremost, want to discuss rates. Interest rates, yes, they're starting the day at 6.99. But with today's jobs report, it is likely we will see something with a 7 in front of it. So let's understand what happened with the jobs report and really want to dive into the aspect of value and really tying it down to the NAR settlement, National Association of Realtors. So first and foremost, jobs report. As I've been advocating over the last few weeks, the Fed has undoubtedly repositioned what they are targeting now in regards to rate cuts. Where, yes, this started out as a fight against inflation. Fed has two mandates: maximum employment and price stability. Inflation, it's doing its thing. Yes, it's coming down, albeit slowly. And the Fed has acknowledged that. There is still work to be done. But their fear is adjusting rates higher potentially puts other holes in the economy, but dropping too quick without other sectors showing signs of weakness, inflation comes back at a rapid rate. So it leaves the employment sector. So employment has been wildly focused on by essentially all aspects of the market. So leading into today's jobs report, knowing that the Fed, specifically Jerome Powell and other voting members, have indicated that, hey, yes, we're seeing progress on inflation, but really now turning our focus to that of the labor market. There was a lot of anticipation going in today. And if we remember last month's jobs report, unemployment did increase from 3.7 to 3.9. Yet we saw a staggering number of new jobs come online, 275,000 non-farm payrolls as opposed to the estimated 200. Well, fast forward to today. Unemployment moved from 3.9 to 3.8. Market was expecting 200,000 new jobs created. We got 303. So a miss on both fronts. And as it sits right now, where the market is just waking up, interest rates are feeling some pressure. Now, it could be worse, or it could have been worse. So we believe that a lot of the buildup into this, given the ADP report that was released earlier this week, was stronger than expected, coupled with the initial jobless claims, so on and so forth. There was an expectation going into this jobs report that we were going to get a stronger print. So the big question being asked is, well, what does this mean? What impact does it have? And again, I want to preface by saying I don't have a crystal ball. And the one that I did have is in fact broken. So really the only entity that knows the outcome from today's report is going to be the Fed. And we've got to wait and see. But the expectation here is, leading up to all these reports today, jobs reports specifically, the Fed has indicated that there are still targeting rate cuts this year, 3 to be specific. And it's likely we're going to see them percolate through the remainder of the year, more towards the back half. So I do adamantly believe we're not going to see a swift change in correction. But as we've seen over the last 2 years, volatility will reign supreme. So as this continues to evolve, as always, we will report on, bring the information so you can disseminate down to your clients. The biggest thing I want to hammer home here is value. Again, talk of the town remains the National Association of Realtors settlement. We know that there's changes coming. We don't know the scope, how far, if they'll adopt everything. It still has to be approved by a judge and then ultimately be implemented in July. But that said, our consumers are asking questions, whether out loud or here internally. And what we're finding is those who are going to identify success are getting in front of that conversation our clients are having, whether external or internal. So here it comes down to articulating your value. Very similar in the mortgage world as we've experienced for many years. Number one question we're asked, what is your rate? And if you're not able to address that question quickly, confidently, with compassion, understanding, and really honing in on what your value is to the consumer, you're lost. Very similar to your scenario. What are your commissions? If you can't articulate your value, you are behind the curve. So really the conversation needs to be how you articulate your value proposition to your client. We're again cultivating some incredibly useful information where we've had tremendous success with being able to articulate our value to our consumers. We are wanting to provide that to our referral partners. So if you're in this quandary where how do I get in front of this? How do I articulate my value to the end user? We want to help. Shoot me a message, shoot me a DM, comment on this video, comment on my email. We have some incredibly useful tools that we would love to review with you. With that said, make it a fantastic Friday and an even greater weekend. Thank you.